I will only buy once it breaks above the 200-day moving average. I will only buy once it breaks above the 99-day moving average. Or I will only buy once it bounces off a level of support. That's when you start transacting only. You transact based on your level of planning. You transact based on the level of, regardless if it's technical analysis, regardless if it's portfolio allocation, you just wanting to diversify into a different asset class than the stock market, or whether it's you dollar cost averaging, or whether it's you also, okay, it's not as cheap as what it was before, I don't want to buy it. It's still, at the end of the day, being true to yourself and following what your strategy is. Hey guys, so the crypto market is up once again. We have Bitcoin go above the 40,000 mark. We also have Ethereum go above the 3,000 level. Please do note at some point in January this year, somewhere around January 2020, we started to see it drop. But please do note also, as you stretch out the chart for Bitcoin, Ethereum, and other cryptocurrencies, we sort of topped off at some point in November, and we started developing lower highs and lower lows as well. But the drop that happened last mid-January 2022, brought Bitcoin below the 40,000 mark and brought Ethereum below the 3,000 mark, which caused a lot of people to ask what's happening, what's actually causing this particular types of drop. Now that it's starting to push up once again, people have started to change their sentiment. And here's what I want to say to all of this, and this is what I've been saying over and over in the cryptocurrency market. It will always be volatile. There's a lot of adoption right now. There's a lot of development right now. There's a lot of smart people moving into the space. There's a lot of institutions coming in. But at the end of the day, comparing it to a lot of the traditional markets, comparing it to the money supply, comparing it to gold, comparing it to the market cap of real estate, to the stock market, it's still very, very small. Please do note this, and I'll make a video about this. Facebook dropped and its market cap got decimated by over 200 billion US dollars. Please do note that that 200 billion US dollars in terms of market cap was bigger than all of the cryptocurrencies with the exception of Bitcoin and Ethereum. That's how small the cryptocurrency market is. That's how early everything is. What does that mean? Since it's so early and since a lot of people don't understand it yet, there will still be a lot of volatility. There will still be a lot of uncertainty. And here's the thing. Volatility goes both ways. Volatility during sell downs will bring the markets, Bitcoin, Ethereum, and all of the altcoins massively lower. And in the same way, volatility also on the upside, when there's buying, we'll see faster spikes as compared to traditional markets. And I don't see this changing up until we hit more than 1 billion users, up until this matures and there's a lot of price discovery. I want to say this over and over, that if people tell you that go into crypto and it's gonna moon, then they're shortchanging you, because at the end of the day, any investment will always be high risk, high reward, low risk, low reward. High reward, high volatility, low reward, lower volatility. What you pay for in return requires conviction when things are volatile. You don't want a lot of return, then the trade-off there is you must be investing in something that's not as volatile, something that will give you stability, something that will give you security, and there's nothing wrong with that. And there are also cryptos that you can put into a stable coin and give you yield. The stable coin won't go anywhere, the stable coin won't give you capital appreciation, but you're getting cash flow off of it. So why am I saying this? When markets are down, when there's a lot of volatility headed down, you mustn't be emotional. But in the same way, when markets are starting to bounce, when it's starting to head back up, you shouldn't be emotional as well. And that's why I've been harping it over and over to just follow your plan. Follow your plan in good times, follow your plan in bad times, disregard your emotion in good times, disregard your emotion on bad times. Don't put in more money just because you feel everyone's putting in more and everything is going up. And in the same way also, don't put less money when it's going down, when people are starting to be scared. Ultimately, that's why I've been saying this over and over. Spend a lot of time to study, spend a lot of time to build your conviction, because as you spend a lot of time to study and build your conviction, that's when you get to figure out on what you're supposed to do in moments like this, in moments when it's dropping, in moments when it's rebounding, in moments when everyone's excited. It may be going up right now, but it doesn't mean it's gonna continue to go up. There will be times again also that people who entered early will also want to take profits, and as they start to take profits, we could possibly see corrections, dips, in the market once again. And if you don't know what your plan is, regardless if it's selling, holding, avoiding, or buying, then you will be startled. That being said, please do note also that we really aren't out of the woods yet. From Bitcoin, Ethereum, and other cryptos, we still need to break the downtrend. We still need to break relevant moving averages like the 99-day moving average and the 200-day moving average. What we've seen so far over the past few days is it started to build a base already. And a question that you must ask yourself also if you are an investor, what are you doing? Also, that when it dropped, you bought a lot, you accumulated, you stacked. As it went higher, are you selling? Are you hodling? If you have more funds, are you adding more? Those are questions that you need to realize that you would be able to answer by yourself, not me. Why? Because we have different strategies, we have different timelines, we have different time horizons on when we want to hold whatever positions or assets we have. And we have different conviction levels. Some of you might not be even buying Bitcoin. You might be buying those smart contract blockchains. You might be even going for the smaller ones. You may not be even going for Ethereum. You may not be even going for Solana or Avalanche. You might be going for Algo, Near, or FTM, which is not wrong also, as long as you are getting into it because you studied it, because you understood it, and because you're not just following what the crowd is actually doing. Now, why am I saying this? This video is to balance everything out, that when the markets were dropping, I was saying to you, stick to your conviction, stick to the level of understanding that you have and whatever plan that you crafted. And in the same way, right now, as we've started to see it a bit start to push up, please don't be emotional also. Please don't start aping in also because you felt you missed out when it was relatively lower. Always go back to the level of what your plan is. And if your plan is you're actually saying, I will only buy, I will be strict to buy Luna below 50, I will buy Solana when it's below 100, I will buy Ethereum when it's below 2,800, I will buy Bitcoin when it's below 37,000. When it's no longer there, then you don't have to buy anymore. In the same way, if your style is, I will only buy once it breaks above the 200-day moving average, I will only buy once it breaks above the 99-day moving average, or I will only buy once it bounces off a level of support. That's when you start transacting only. You transact based on your level of planning. You transact based on the level of, regardless if it's technical analysis, regardless if it's portfolio allocation, you just wanting to diversify into a different asset class than the stock market, or whether it's you dollar cost averaging, or whether it's you also, okay, it's not as cheap as what it was before, I don't want to buy it. But ultimately, what I'm just trying to say here is, don't rely on your emotions. Regardless if it's technicals, stock to flow, proper diversification strategies, or really just allocating to a different set of coins because you already have an excess, or for those who, okay, you were able to sell an NFT of extra ETH, what do you do about it? It's still, at the end of the day, being true to yourself and following what your strategy is. And if you feel that, oh man, I wasn't able to buy the dip, I wasn't able to buy it when it was relatively lower, please do remember this, that since it's volatile, you will always have opportunities, even in the future. And I've seen this in the stock market over and over, that even the good ones, you've seen it even in Facebook this week, you've seen the drop, but even Tesla had its moments when it was dropping massively. In the same way also for Apple, for Google, for Microsoft, for Amazon, for the big companies that have earnings, if they have seen drops, how much more for something that's relatively in its infancy? How much more for something that is not gauged by PE ratios, it's not gauged by dividend yield, it's not gauged by price to book ratios, it's gauged by the underlying technology of what it's currently disrupting. And since it's trying to disrupt things, there's still a lot of speculation behind it, and that's why conviction is required, conviction based on information. So there, this is just a friendly reminder not to follow your emotions. This is just a friendly reminder not to FOMO, not to YOLO, to be rational with your decisions. And if your goal is to buy every time you have cash, and your cash is there right now, and whatever you were planning to buy, the thesis behind those coins and tokens have not changed, then by all means hodl it, or by all means stack. But again, take the time to learn, take the time to study. If you want to learn more about cryptocurrencies, altcoins, NFTs, the stock market, REITs, and bonds, I have a 6 session course, which is happening next month already. It's a live Zoom course. Links are in the description below for those who want to join. But if you want to learn via reading, I have books that are available in Shopee. You can check it also in the description below. But for those who want to learn more about technical and fundamental analysis, which the technical part you can apply in the stock market and the crypto markets, check it out down below. We have a pre-recorded course that you can watch at your own convenience. So I hope that this was something that was helpful. I hope that this was something that was insightful for all of you. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.